Let's talk about the ADX. And while we're at it, just take a second to subscribe to this channel. So what is the average directional index? We're going to call it the ADX for short. And it's a technical indicator that measures the strength of a trend. Now understand that most instruments, they spend more time in a consolidated environment as opposed to actually trending. It's helpful to know if the market that you're looking at has any life to it. And from experience, there is absolutely nothing more frustrating than attempting to take trend trades, such as pullbacks, only to do that in a weekly trending market. And I want to talk about the basic form of the ADX as opposed to the DMI version and the difference between the two. That is, the ADX is composed of one line and helps a trader determine if a market's trending and that strength of that trend. The DMI version has three lines, that includes the ADX line, plus two other lines that we call directional movement lines, DM plus and DM minus. They're often used to determine trend direction, and they can be used as buy and sell signals when they cross, and that's called DI crosses. And I don't look at it that way. I would never use that in that form. And traders have to understand the limitations of lagging technical indicators and their ability to get caught up in the market noise. And I prefer using structure and price action along with trading indicators for a complete trading strategy. So the ADX indicator, it fluctuates between a high of 100 and a low of 0. And there are levels inside of that range that traders pay attention to. 0 to 24. We just consider that a weak trend or a non-existent trend in the market. 25 to 49. At that point, we're going to look at the market as a trending market. And the trend trades can be considered because we're going to consider that there's strength in that market. And 50 to 74, that is a strong trend. And traders should be looking to lock in any profits or at least reduce some risk. 75 to 100. I don't think I've ever seen that. It's an extremely strong trend, and traders should be on alert for sudden price shocks against their position. And you know what? Even at 50 to 74, you want to start looking for reversals. And we'll talk about that later. And the setting of the ADX is 14. And I've highlighted areas on this chart of Bitcoin that traders would want to pay attention to. The two orange lines are the 25 and the 50 ADX readings. And that's where you would determine the strength of a trend. When the market's below the 25, you can see through the price action that trading those areas on the chart would be pretty tough. And between the lines where the ADX is above 25, we can see that there's price movement that you could take trades off of and be rewarded for. Above the 50, we want to watch for signs a strong trend is about to end. A turn down in the ADX, that shows the trend is losing strength. And I want you to note that the slope of the ADX is not related to the trend direction. Now, there are two main ways that we can use the ADX as part of a trading system. But first, you have to know your style of trading. And the great thing about the ADX is that you can use it to scan through your instruments to see which ones are in line with your style of trading. Trend traders that look for continuation trades through pullbacks or small range breakouts, they're going to scan for markets that read over 25. Traders who look to trade breakouts from consolidations, looking to be in the market before the trend moves, you'd look for ADX less than 25. So let's talk about breakout trades first. And heading back to the Bitcoin chart here, I used a vertical line to show where the ADX has fallen below the trending cutoff point. So during the scan, we find the ADX showing a weak or non-existent trend, and in doing so, we look for consolidation structures for breakout trading. And I've used dashed green lines here to mark off the high and the low of the range. Now, price is making higher lows into resistance as shown by the blue line. That is bullish. We have small basing, and I've underlined that in red, just under resistance, and that is also bullish. The trade entry for a long trade can be inside the smaller base, and the stop loss can be under the range or through an ATR stop loss setting. The initial targets for profit or trade management is the size of the range and height projected from the breakout level. Now trading pullbacks, which is my preferred trading method. And when you're trading continuation trades, we want to ensure that the market that we're looking at has energy in it. So when scanning our charts, looking for ADX plus 25 can have us digging deeper into the chart with technical analysis. And for this example, I've included the 20-period moving average for trend direction. You don't need it. It's just for this example. And you can watch this video here about moving averages to learn how to better use them in your trading. And I put the link at the top at the right here. And our approach is going to be using bull flags or bear flags in various forms. Now, price here is hugging the moving average, and that shows a market that is in balance. You can see that the ADX is below 25, and trend traders would ignore this currency pair at this point. This trend line, it highlights a break of the weak downtrend. However, it also shows here trend strength is forming. With a break of the trend line, we are now biased towards the long trades. After a 2-day rally, after that trend line break, we get basing at highs of the 1-day momentum, and this is bullish. We trade the breakout of the base, or we can use it as information to what the market may do next. Here is a pullback, trendline break, plus ADX over 25 and rising. Here is an ascending triangle. We got basing below resistance. We look for long trades. Now here, the ADX is reaching 50, and traders should start to pay attention to managing the trades. There are many ways to handle buy signals in this case. Simple trendline breaks can be used, inside candle breaks, breakouts of previous candle highs. It doesn't matter. You just got to choose one and be disciplined in using it. The stop loss, we would handle that the same way we would with any pullback trade. We can use the ATR or below pivots with a little bit of wiggle room. So to wrap it up, the effective use of the ADX, and we got to keep in mind that it is a lagging indicator, but there are some uses that traders may find to be beneficial. And trend strength is the one that most traders are going to use it for. But you can often tell strength of the market by just looking at the relationship of each swing in price. This is a fast and dirty way to scan through your charts to find where your focus should be. Trend traders are looking for ADX plus 25. Breakout traders should look for ADX minus 20. Another way to use the ADX is to screen for instruments with ADX above 50 and look for extreme trend strength. Using a technical analysis approach such as failure tests, you could find counter trend trades that are set up by extreme strength in the other direction. So ensure you have a written trading plan that includes the ADX reading that you need, as well as risk management, so you can survive a run of losing trades. And here, I put a lot of work into my free indicator blueprint guide, really to help traders use indicators more effectively. There is a link in the description below for you to download it. So thanks for watching, and take a second and like the video. Talk to you soon.